All right, thanks, Dave. Thank you very much. I'm really enjoying the conference so far, and I'm excited to give you guys a bit of a talk today on how to trade zero DTE options on SPY. So yeah, my name is Russell Barbour, and I have been trading for a while now. First, we'd like to just start though with a risk disclaimer. So you guys have probably seen these all day. Just glance over it here, but basically you can lose money trading, right? Like we all know that losses are possible and nearly always happen, so you've got to be aware of that. By accessing this webinar, you know that you're not receiving any financial advice. I'm just giving you information on what we do, nothing to do with when to buy or sell anything in particular. So just educational purposes only. And of course, past performance doesn't always guarantee future results. So what we're going to cover today, well, I want to start the presentation with some data that we've had on a service that I've co-founded. I want to show you how we're able to take 2 consecutive years and grow small accounts, but 100% growth on those accounts just using zero DTE SPY options with a win rate of almost 80%. So we're going to start with that to show you what's possible, and if you follow some of the guidelines and things that we've learned over the last few years doing zero DTE SPY options. We're going to talk about how timing, consistency, position sizing all play a huge role in your trading. A lot of people know this, but it's particularly important when it comes to zero DTE options trading. We're going to talk about how a rules-based approach can really reduce mistakes common in zero DTE trading. So this is a little bit of a change of pace from some of the other talks maybe today. We're going to talk about the sort of intangible aspects in detail that really make the difference with a trading strategy, in particular zero DTE options. And so, like I mentioned, I did co-found a service, and I do help run a service called SPY ATM Alerts. And if you stick to the end, you can you'll be getting an offer where you'll be able to come and join us in that service. So, like I promised, here is 2024. This is data from the SPY ATM Alert service. These are trades along the x-axis, so this represents the whole of 2024, but I've put it in number of trades so you can see how much data we actually have here. So in this case, we have 230 trades, each point's a trade result. This was for a small account of just $2,000, and up the x-axis is the profits in dollars. So you can see over the course of the year, it made about 2,400 or so dollars in this, which equates to 124% account growth, just doing one zero DTE SPY trade every single day at 10:30 in the morning. So no over trading, nothing crazy like that, just very simple trading strategy. This wasn't a fluke. We actually did the same thing in 2025. We did a few more trades. There's trades almost every day, a single trade almost every day. But in this case, we did a few more trades, so about 240 trades. So a total data of almost 500 trades over 2 years. And you can see that, again, we have the x-axis here, which is number of trades. And then up the y-axis, we have small account growth. So it started around $2,000, grew all the way up to $4,300. It pulled back a little bit. And like with any of this data, like there's the trend is generally up, but there are pullbacks in the data. You can see like back here at the start of the year, we had a bit of a pullback. But here as well, there's about 100 odd so trades in, there's a bit of a pullback as well. But overall, it's pretty linear growth and pretty stable strategy with very minimal pullbacks in general. So having shown you those results, I just wanted to tell you a little bit more about myself before we get into the talk properly. So like I said, my name is Russell Barbour, and I've had a pretty interesting trading journey over the last 12 years or so. So I started in 2014, and I was kind of a pure research scientist, so I actually worked in physics research, which sounds amazing, and it was very passion-driven. But unfortunately, physics research doesn't actually pay very much. So I was kind of broke, and we were always looking for ways to make some extra money, and trading was one of the things that came up. So I actually started trading penny stocks at the market open when I lived in Seattle, and that involved getting up at the open, so 6:30 a.m., and trading like what I would call a crackhead day trader. So taking lots and lots of scalp, following different gurus, and just desperately trying to make money. And of course, that backfired horribly, and I lost 20,000 of the $30,000 account very quickly in the market. So this is a big deal to me. My wife had a lot of student loan debt, and like I said, we were really struggling for money. So I had very limited time. I had to trade before I started working at the University of Washington at the time. And so there was a lot of emotions involved. And that was really my downfall. And it's part of the reason that inspired this talk today is a strategy that gets around a lot of the problems I had early on in my trading. And so like a lot of people, I spent years chasing strategies, over trading, letting emotions destroy my trading account, oversizing positions, all the common mistakes that I think have to be reinforced a lot more and actually are. A lot of people focus just on directional strategies and win rate, but there's a lot more goes into trading, especially zero DTE trading, that probably isn't talked about quite enough from my experience. So everything changed for me a few years ago. It took me many, many years to get into trading and really find something that worked. I actually met my friend called Phil, who's now my business partner, and he's a genius strategy developer. So he works behind the scenes and develops profitable trading strategies through rigorous back testing and forward testing, and just is never happy unless the strategy is actually profitable and has a statistical meaningful edge to it, which a lot of traders don't end up using, right? The strategy might not actually work long term, but Phil looks at very long time frames and very, very high details. So this is where the zero DTE strategy that we currently use in SPY ATM actually came from, was Phil developed it, and then we partnered up on it, and I've never looked back. We've been making money ever since with it, and a lot of really happy students and colleagues and people have been making money with it too. So it's really a consistent and mechanical strategy where a lot of things like position sizing and consistency and discipline are emphasized more than just simply being right. So now I basically focus on zero DTE SPY options intraday, obviously, with one high quality trade every single day at 10:30 in the morning. And like I said, I'm the co-founder of the trade alert services called SPY ATM Alerts, and we're going to talk about that later on in the talk here. So let's talk about zero DTE. So zero DTE can be a challenge, but we've made it simple. So we're going to talk about what zero DTE contracts are for the people that don't actually know what they are or haven't really had much exposure to them yet. Why they're so popular now. They're extremely popular. Lots of talk about the benefits and risks on how to manage the trades, key emotion aspects of zero DTE in particular, and why we actually trade zero DTE SPY in particular as well. There's some advantages to doing that over just trading other tickers and things. And then we're going to talk about why the SPY ATM alert service works so well for particularly zero DTE trading. So for people that don't know, and a lot of people will, because this has become one of the most popular strategies out there since about the COVID time. So from about 2022 onwards, this basically was a strategy that revolutionized retail traders. So it caught the attention of so many traders, and that's the zero DTE options. So 0 days obviously is the zero, DTE is days to expiration. And of course, that means they expire the same day. There's no days to expiration. So technically, there's 1 day to expiration, right? Because you're during that day, but they're called zero DTE, so the same day to expirations. And so this involves looking at minute-to-minute performance on very short time frames. It's not like you're holding this overnight or swing trading it. These things have to be done and dusted by the market close. So to kind of put that into perspective, you've got the long-term options, 365 days, they're leaps. Then you have the typical 30-day monthly contracts. And then right at the far left of the extreme things is the zero DTE options contracts. So the big question is, why are they so popular? Well, there are several reasons that they're so popular. The first is the cost. So they're much cheaper than longer dated options. They basically have no time value left, so you're not going to pay much for these at all. And especially on SPY, we'll talk about that in a little bit, but the zero DTE options cost much less than the longer ones, with sometimes contracts costing as little as $100. So you can use, small accounts and still actually be able to play these, as opposed to longer dated options where you won't even be able to play because if you have a small account. And so the other main thing that attracts people, and this is really the most popular reason, is the price sensitivity. So they can really rise and fall extremely fast, hundreds of percent sometimes in minutes, even seconds. You see like serious percent gains or losses. So these can really move dramatically within minutes or hours, especially near the market close, which I don't recommend. Trading near the market close has never worked well for me. The fact there's daily trading opportunities on SPY as well allows you to do these zero DTE strategies almost every trading day with no overnight risk, obviously, because you're exiting before the market closes. So there are a bunch of risks though, and these are things that our strategy is supposed to address in some way. So the first one is time decay. So you're probably familiar with this, but this is something that if you're not familiar with, you become familiar with very quickly if you're trading zero DTE options. Your premium starts to decrease even if the market's going in the right direction a lot of times. So you end up with this a decay in the options value, and you're sitting there just wondering what on earth's going on if you're not familiar with time decay when you're playing these, and you can get very frustrated at that. So time decay is a serious threat when it comes to zero DTE options. Now, high sensitivity is a double-edged sword, right? So we have the potential to make a lot of money very quickly, since gamma is extremely high on these zero DTE options. And so this does make them react really sharply, but it goes up and down. So it can go against you or it can go for you. And this can introduce a lot of problems in itself. And that can be things like execution challenges. So just trying to get into these options at a price, especially on individual tickers, can actually be a real pain. It can be a real problem. So the price is changing so fast, you can't really market in, or you'll get a horrible fill. So there's definitely a lot of challenges with zero DTE trading. So basically, in short, zero DTE options, they're fast to move, they're cheap to buy, but they are extremely risky. And if you've known anybody who trades zero DTE, you're probably, the good chances you know of somebody who's blown up trading zero DTE, thinking that they're making fast money, and in reality, it's much harder than it looks. And so this is a mix that appeals to some people, but again, it's unsuitable for many people, including me. It took me a while to get the hang of this, and it really took Phil's guidance with his system to get me actually on top of this, because I'm such an emotional trader. And so I really needed a really mechanical system to deal with this. So how do you manage time decay? That's the problem, right? If you're sitting there and your options contracts are going down in value, and you're not even, the underline's not even moving, it's a problem because there's no time left. They lose value pretty quickly. And so even if the market moves in the right direction, your option premium can shrink, and it can shrink to zero or very low very quickly and really burn up your account. So the solution to this is what we found, and what a lot of people probably try and do, is you don't want to be in the market too long with zero DTE options. The longer you're in the market, the more chance of some horrible news coming out, something tanking the underlying and causing your options to drop, sometimes to the point where they're not recoverable in time before the market close. So you want a fast strategy. So something that's a day trade, maybe not quite a scalp because of execution issues, something that's fairly quick to go in your favor. So you want a fast strategy, preferably with a high win rate. We all like high win rates. And in this case, of course, you want to win as many trades as you possibly can. You don't want to be waiting all day for the market to move in the right direction, just hoping, on that hopium where you're hoping it's going in the right direction. So that's one way to manage time decay. If you're not familiar with this, this is the classic plot of theta decay. On the left here, you can see we have the options, which are 90 days to expiration. And the gradient of the time value is very flat here. So if you're buying options that are 90 days out, you're probably not going to get theta decay of any meaningful amount at this point. So you can kind of relax out here. As you go to the right, here is the expiration along this x-axis here starts to shorten. You can see at the far extreme here on the right, this is the problem, right? You have this steep gradient of theta decay when you're close to expiration here. So this is kind of the classic picture that you see with theta decay. So it's something that you really have to bear in mind when you're trading zero DTE options. So gamma is the next thing. So we talked about gamma a little bit, this extreme price movement. So gamma makes these options respond really sharply to price changes over longer dated ones. So these rapid price swings can work for you, or they can work against you, right? So this is another classic plot that shows at the money options. So if you've got some at the money options here, strike price along the x-axis here. The curve in green is the zero DTE gamma, and so you can see how it's much higher than even the 10 days to expiration, the blue, like right here, and then the 20-day to expiration is the orange. So you can see if you've got at the money options on zero DTE, you're going to be much more sensitive to price changes on the underlying than if you've even got 10 days or 20 days. So significant difference. So all this leads to these emotional aspects of zero DTE trading that I struggled with for the longest time. And so basically everything's amplified on zero DTE, right? It's still trading, it's still the same emotional challenges that we all face, but on zero DTE, it's amplified to the extreme sometimes, where the fast pace and the high pressure, the potential for these rapid gains and losses before you can react, or you let your emotions take over, is a serious issue. So you have this high stress and high pressure. The rapid expirations force these high stakes decisions. So you really have to have a mechanical strategy. It all comes back to having a mechanical strategy. that is executed perfectly. The fear of loss is really real. I mean, if you hesitate on these or get out early, or even worse, hold until they're worthless, it's a serious problem, that fear of loss. Of course, with that comes greed and overconfidence. So if you have some 500% wins on a zero DTE contract early on in your trading career, you're going to really think that you've made the big time, right? That you can just keep trading this, and you'll end up over risking, holding too long, potentially blowing up your account as well. So all these things are amplified with zero DTE trading, including impulsive trading. So again, emotional decisions that replace that plan that's supposed to keep you safe gets destroyed with the short time frames involved with zero DTE trading. So you have that adrenaline rush, that thrill-seeking behavior that can really take you from disciplined mechanical trader to a gambler. So you've got to be really aware of that, and it's something that really, I have to think about every day as well to make sure that I'm not allowing this to happen. So I wanted to give you a real-world example of the cost, because this is something that a lot of new traders, and we see them in our service a lot, they're small accounts, and what attracts them to zero DTE options is the fact that they can actually take many positions and scale in and out of positions because the contracts are cheap enough. So here's an example on the Qs. If you've never seen this before, it's quite dramatic, the difference in the prices. So the Qs can be at 349.2, and the zero DTE 350 calls are $1.10 or $110 per contract. Whereas if you go to just the 18 days out, 350 calls in this scenario, you're going to pay $730, so 7 times as much for contracts that are 18 days out. So you can see why you might want to use the zero DTE options in this case at $110 instead of 730. Of course, it gets worse and worse the further out you go. So 81 days to expiration on the 350 calls, you're talking at $1,600 for a contract. So if you have a $2,000 account, that basically prices you out from taking any trades on this. So people are gravitating to these zero DTE options because of this type of pricing. It's not the same for every ticker, obviously. SPX is notoriously high. So you want to go with something like SPY, for example. And this is actually one of the most important aspects of trading zero DTEs is this example. So imagine you bought an at-the-money call option on the Qs. And if the Qs are at 350, basically, and $1 price change or increase in Q will increase the value of your call contract by 50 cents. It makes a massive difference on these expirations. So these short-term options, they experience much larger percentage gains and losses, obviously, based on the small underlying move of just $1 in the Qs in this example. So if you look at this, you can see that you have zero DTE contracts. So these are the zero DTE ones right here in the first column. And basically, if you bought them for $1.10 and we move $1 up on the Qs, you move 50 cents up on the contract. So delta about 50 at the money. And so you end up with a 45% increase in your options contract, which is pretty nice for a $1 move in the Qs. This deteriorates rapidly. Annoyingly, as you pay more for the contracts, you actually get much less value on the returns. So if you look at the next column, the 18 days to expiration is really like $730 for a contract. The same $1 Q move will result in 50 cents, which is only a 7% gain. So which would you rather have, the 45% or the 7%? And it gets even worse than that. At 81 days out, we're talking $1,600 for a contract and just a 3% gain if the underlying goes in your favor. So it's pretty crazy, the difference in that. So you can really see why people are drawn to zero DTE options. So just to kind of summarize what we're saying here, there's quick potential returns, obviously. The costs are much lower and the price sensitivity can lead to some massive gains, hundreds of percent sometimes in a matter of tens of minutes usually. And then, so the cons are you have this rapid time decay, which is really annoying, but you can get around that. We talked about that a little bit. You get extreme price sensitivity is a double-edged sword, where you can lose a lot of money very quickly, if not your whole position sometimes. And there's execution risks as well with zero DTE trading. So this is all just talking about going long zero DTE options. So the big question is, why just trade zero DTE SPY options so that it's so popular? It's not popular by accident. There's so much volume on SPY zero DTE. that you get these very, very tight spreads and high liquidity, which makes it so much easier to trade than just trying to find some random ticker that might have 0 DTE for that day. But the spreads on those individual tickers can be horrendous, and the volume on SPY is really what makes it super attractive. So some of the highest volume out there, you can use market orders to buy options, which is a huge advantage if you're doing some quick day trades. You don't have to set orders, you don't have to worry about this execution issue as much, where the thing moves off without you, or the spreads change rapidly and you're kind of screwed. So there's a lot to be said for trading 0 DTE options on SPY. And like I said, they actually are every day now, so you don't have to look for tickers to trade, so you can just trade the market, which is really nice. So that massive volume translates to high liquidity for its options, and these narrow bid-ask spreads are really good for execution. And of course, they're also very cheap as well, so you don't need much capital. So like I said, it's not popular by accident. It's something that really works well for a lot of traders if you have the right strategy, which is the important part. And so it kind of brings me to this idea of why our SPY ATM strategy works when others fail. There's so many reasons, but the ATM strategy is really simple. It's really fast. It's very accurate with very mechanical trades. So you don't want to be trading all these individual tickers. Even if you get, you find one that has 0 DTE options on it, you've got a lot of work to do that. And you've got to find the ones with the right spreads, so it's not crazy. Then you've got to worry about things like earning surprises, halts, company-specific news that can really tank your options to the point where they're not going to recover by the close, which they have to do because it's 0 DTE. So you can really destroy those options positions pretty quickly. So that's why focusing on SPY options with a very mechanical approach really gets around a lot of these problems with some of these issues with other tickers and things. So you don't have to do scans all the time. You don't have to worry about all this stuff. So just trading the market has worked really well for me over the last couple of years. So people still fail miserably trading 0 DTE SPY options, though. I've known plenty of people that have blown up their accounts over the years just trading 0 DTE SPY. And the number one problem I see with traders that do that is the lack of a mechanical system that is executed with absolute precision and complete autonomy. So one thing that we preach a lot, and it's such a basic thing, but a lot of people don't do it, and it's so important on 0 DTE options, is you really want to put in an OCO order to take profit and have a stop loss defined already. So many people will wing it and just kind of mark it in and out because you can on SPY, but then you've got to make sure you've got those things mechanically, because the emotions with 0 DTE trading are going to stop you from executing your plan. So we absolutely insist that all the members in SPY ATM alerts put in OCO orders. So either it moves up and it takes profit, and then cancels the order, or it moves down and stops out and it cancels the other orders. And so we also absolutely rant on about position sizing too. We talk about that in a few slides as well. But basically having these mechanical rules in place really do simplify that decision making, removes all the overthinking, all the issues you can have with that. And you end up with flawless execution without fear, without second guessing what you're doing. And really these rules and discipline is what makes your edge. You can have a really great strategy where everything goes perfect, but the timing really matters. You can have the same setup as somebody else. Like you can have the same strategy, the same everything, and you end up basically having a different result from them. So you don't always get the same result, even if you're trading the same thing and exactly the same way, because your emotions come into play and you get kind of screwed. So basically entry timing also affects the risk a lot. We're going to talk about that in the next couple of slides. The fact that options pricing is time sensitive is also important. And like I said, you can have two traders, they're both right in the direction, and they still have opposite outcomes because they get in when volatility is high, or they leave it a little bit late, or they get bad fills. All this stuff comes into play with 0 DTE trading. So one thing I really found helpful, it really changed my basically my trading, was that basically I used to trade the market open. Remember at the start of the presentation, I talked about how I traded penny stocks. I mentioned it at least, I traded penny stocks at market open. And for me, that really is not a good time. So sometimes just learning what works for you is so important, right? For some traders, they can trade market open really, really well. I'm not one of those traders. My emotions get too much into it and I end up just making a real mess of everything. So the open is very chaotic. you have structure mid-morning, you have midday compression, and then in the afternoon you have positioning for the next day. So it's really important with zero DTE to really remember that. Remember when you're actually figure out when you're actually going to get into the trade to minimize some of the problems that you'll see in the next few slides. So the market does have that rhythm, and understanding when to trade is often just as important, if not more so, than what you're trading and how you're trading it. So this is why I had problems at market open. So hopefully there's people watching this that have got a great strategy for market open and it works really well and everything's fantastic. But for me, the high volatility is just killing me with options. So what would happen is the volatility would be very high at market open and enter, overpay for my options premium due to the high IV. And then as the day went on, it would just kill the contracts as well as time decay. So you're getting that compounding effect. So that was a nightmare for me. The wide spreads is often a problem. False breakouts are that really killed me too with my emotional aspect of things. Before I started trading SPY ATM, the false breakouts would really get me thinking that things were happening when they weren't. So that's a nightmare at market open for me too. A lot of retail emotion as well. So even though the first 30 minutes can look really exciting, what I've found, and probably some other people here, is that it's often a trap. So the discovery is still happening on the prices, liquidity hasn't fully settled yet, and it's just a very difficult time to trade. And so when we were looking at SPY ATM, we wanted to make sure that we weren't trading at the market open when all these problems were still there. So the position sizing is critical. So this is something I learned as well. I was over positioning so much. And for zero DTE trading, I think position sizing is even more important, right? You have to almost treat it like it's a lotto each time. So the risk per trade really does matter in zero DTE trading because you want that consistency over confidence. You're not trying to hit home runs. You're trying to get a statistical edge that works over hundreds and hundreds of trades so that you end up winning with the consistency and not just blowing up your account. So typically the size that I trade with is only about 5% of my account, which is actually quite small. A lot of people I know and a lot of new traders as well trade a bit more than that, but you have to assume you're going to lose 50% of the position, right? You're going to be okay with that. Can your account take a 10% haircut? I know mine certainly can't, so you wouldn't want to be trading with 20% or something of your account, but a lot of people do. And so it's something that we really stress in SPY ATM, is especially for new traders, is you got to keep those position sizes really under control. It's hard, but because you want to make all that money. But like I said, most blowups I've seen are from oversizing, not necessarily bad analysis. It keeps you in the game long enough for that consistency to matter. So this is what we've discussed so far. We've discussed why zero DTE is so popular, the risks of zero DTE trading, why most zero DTE strategies fail or just too much work. The timing of the market matters. So getting into the trades in the right time frame matters, and position sizing and risk mitigation as well. So that's been about 30 minutes, and I thought for the last 5 minutes or so here, I'll just give you a bit more information about our SPY ATM alerts. So it all came together for me when I started trading with Phil's strategy a couple of years ago. I really got into this, and this is SPY ATM that we started together, which is a really fantastic trading alert service. So this question of all you needed to do was place the trade. That's all you need to do. You don't have to scan. You don't have to do anything else. All you have to do is place the trade at a fixed time in the morning. So in this case, it's 10:30 in the morning. So all the trades are placed at almost exactly 10:30 in the morning and on the dot. And if that's all you needed to do, then you imagine how much simpler your life would be if you were already practically day trading all day, frantically going through the market trying to make money. And you can do this and still make 100% a year on your account according to our previous results. Obviously, doesn't necessarily mean going forward it would be, but the previous results have been very, very good. And so the SPY ATM alert solves a lot of the problems we were just talking about, in that it's a fast trade. So typically the average is 20 minutes. So I actually call it 20% in 20 minutes. We're not going for 100% or 200% wins. We're just trying to get in and out of the market and capitalize on the small moves in that 20 minutes. Sometimes it's 5 minutes, sometimes it's 10 or 15 or 30 minutes. But overall, we're getting out before it can really take a decay on the position. And so, like I said, it's entered mid-morning, 10:30 a.m. Eastern time every day, where the market's stable. It's very well mechanically executed, and we don't stop ranting about that in the Discord that we run, so there's no way you'll miss that. They're very well-defined rules. The win rate is really high, so close to 80% over 500 trades. The trade direction is determined by predefined proprietary logic developed over years and years by Phil, who is absolutely a genius when it comes to this stuff. He's really done a really great job. Probably one of the best strategies I've ever seen, and I've looked at a lot of strategies over the years. So just imagine not guessing. There's no chasing involved. There's no hesitating. It's just place an order, bang, you're in. Takes about 30 seconds, and you're good to go for that trade. So on a predefined plan. Here's an example of what a trade actually looks like. So these trades are issued at 10:30 in the morning. You can see up the top left here, 10:30 in the morning. This is a call alert, and it's when SPY was at 693, and you get given the strike price, the options, the entry price, and the take profit price, so 119 and 143, with the stop loss as well here. So this comes out in Discord, so it's fantastic. You can either be logged in or you can get a push notification to your phone, so you get notified when the alert actually comes out, and so you can get in on time. So these are very easy to execute because it's 0DTE contracts on SPY. People often just market into this and get close to the entry price, very, very close to the entry price on these alerts. So there's no slippage between the alert price and the actual execution price. So yeah. So that's kind of an example of one of these alerts. So the big question is, with SPY ATM4, well, I think by now you probably have a good feel for whether this is right for you or not, right? Because basically you have to be a very mechanical trader. You want a rule-based approach. Maybe you've failed miserably with your emotions like I did, or you're just looking for something that's very mechanical. It's definitely something you'd like with this strategy. And so it's executed at 10:30 a.m. Eastern time. So you do have to be available at that time, obviously. And that's good for some people. It suits them perfect. Just log in, do your trade, and then leave, go back on with your day. So if you're a busy professional, you don't have to be glued to your screen like non-stop for the whole day, or wait for a text message to come out from some guru that basically you don't know when it's going to happen. So you know when this trade is going to happen. So that's a really beautiful thing about this strategy. And so it's a single trade. You're not trading all day. It's really relaxed that way. It's for people who like to find risk, clear exits, and consistency rather than home runs. And if you only have 20 minutes a day or so for a focused intentional trade, then this is really something that I think you would really love. So we have hundreds of members, and most of them really enjoy the service, I think. And this is one example of a brand new trader. Zig Price was a struggling trader with a small account. He's now not a struggling trader, and his account has grown thanks to SPY ATM. But you can see his testimonial here. This is when he was quite new to the service. So like I said, he's still with us, and he's still making money. So he's really excited about it. You can see he said SPY ATM is easy enough to grasp, but open enough to tailor to your own strategy. You can see what he says here. He's tried half a dozen services over the past years, and by far, this is the most competitive and easy to implement and adjust to. You show up, place the orders, and most of the time, disclaimer there, make money. It's that easy. Been here 2 weeks. So he took 10 trades, up 8.5%. And while this is not hugely statistically significant, he has continued that progress. And that's been our experience with the whole system. So it's a snapshot, but it's good. Moving on here to Lance. So Lance grew his trading account using SPY ATM 78% in 6 months, which is phenomenal. Absolutely phenomenal. He says SPY ATM has been a great service for me. He started with just a $10,000 account in May 2025. And he's made $7,778 or 78% in 6 months. And he actually sent me his data for this. So in the same way that we've been collecting the data, he actually collects his own data as well. And you can see that during the 6 months, he had a very nice linear growth curve, bit of pullback in August, but apart from that, went really well. Up 80% on SPY ATM alerts in 2025 on a $10,000 account. So pretty nice. So recapping 20% in 20 minutes, what I call it, one alert window, 10:30 Eastern time, simple call or put, there's no fancy spreads or complex option strategies. And you get the entry, stop, and target, you get sizing guidance, you get all the clear rules based, there's no guessing, no overtrading, none of that stuff. If you were using a $10,000 position for this, on winning days, you'd be making $2,000 a day, which is nice. Obviously, there are losses as well. As you can see, there's periods of losses from these plots I showed at the start of the start thing too. So I'm not saying this is a magic bullet or it's going to solve all your trading problems. It's still trading, there's still risk involved, but it works extremely well. So Lance Crew's account 8,000 in 6 months. So the value for this, if you've got even a moderately sized account, would be extremely high, right? You're talking thousands of dollars in profit. So you could easily pay something like $5,000 for a program like this. I've reviewed products over the last decade as well. Tried almost everything out there, and there's things that are easily inferior to this and cost about $5,000. So this is a really high value proposition for you guys for this. But we're not going to charge $5,000. It's actually a very price-friendly scheme. It's only $150 a month for access, and with that you get the active Discord community. So there's lots of experts, people that have been doing this for a while now, and access to Phil as well, who developed the strategy. You also get daily alerts on the zero DTE SPY options at 10:30 Eastern time. There's some skip days, but generally the trades are every day. It's kind of the usual thing. And then so 300 a quarter or 999 annually. The link is on the bottom of the slide there. You can see it says stockalertsreview.com SPY ATM. So I don't know if you can type that into your browsers. I think Dave's going to put the link into the chat as well for that. But this is an opportunity I'd really jump on. It's something that changed my trading for the better. Absolutely changed everything for me. And I think it's something that would really provide a lot of value for you guys as well. So with that, I'm open to some questions.
Hey, someone's asking, what's the typical risk profit ratio?
Yeah, so that's the interesting thing about this strategy is it's actually not the 2-to-1 that you'd hope for, where your wins are twice the size of your losses. It's actually the other way around. So it's not intuitive to a lot of people, but it gives the underlying enough wiggle room with these high zero DTE contracts. You want to give it plenty of room. So over all the testing that we've done on this, it showed that the best way to do this is to have a loose stop. So it's actually, you're risking say $100 and you're potentially going to gain say $100, but you could lose 200 on that trade. So it's not the typical asymmetric risk that you might associate with the swing trading strategy. It's a little different because of the volatility associated with zero DTE trading. So that's what we find to be absolutely optimal for this strategy.